What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is April 5th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I not only want to spend some time diving into cryptocurrency markets, but talking about a lot of the continued developments that are going on in traditional markets, diving through the data and seeing what's actually happening within the economy, what are the projection models that we have right now looking forward over the next coming weeks, and overall, are we still contemplating the idea of a depression versus a recession here in the market? Again, I want to talk about a few different things across the board here, but outside of that as well, we've got a sponsored review of Ledn.io later on in the video, one of the major predominant lending platforms in the cryptocurrency space, so stay tuned for that. You won't want to miss it. So let's go ahead here, though, and dive straight into the video. Taking a look over the last 24 hours, cryptocurrency markets haven't changed that much. Most players here in a no-trend scenario between anywhere from 0 to 2% to the upside or downside. Nothing too severe here with, again, Bitcoin holding up very well here over the last few weeks. As you can see here, the price we're holding at right now are at 6,800, so right under below 7,000, one of the big even $1,000 marks. As we can see, this was key support back here. Major thing that I've noticed is that we've generally been holding at this range for 3 weeks right now. So we can go ahead, break it into the daily here. You can again see here the price looks like it's pressurizing here for a break higher, in my opinion. I think what we're going to be looking for here, as we're about a month away from the halving event, is kind of a post-halving rally. And I do believe that afterwards, after we get the halving event, because it tends to be that people think things are going to happen instantly, that it's just going to skyrocket Bitcoin's price, and that it's the next phase here. We're going into the full swing bull market. It tends to take some time for the halving event. So I think what we could get is price really breaking out here to the upper resistance band and the wedge, and then coming down here in some capacity. Maybe not all the way down here to the lower support level, but again, pulling back to some degree. So for me, I'm full swing in my crypto positions here. I might take a partial share when we start to get up towards around the mid upper $9,000 range. We'll see. I'll let you guys know about it if I do. But at the moment, not doing anything right now. This is really nice to see that we've recovered the majority of the losses from one of the most significant sell side days in crypto markets. And it goes to show it's just a sense of patience that'll usually get you back to where you were before, and hopefully position yourselves in a position where you can make some money over the next coming months or years. In this case, I think crypto markets are going to be fine, guys. I'm not fretting about this. I still believe we've got all the confidence we need going forward. And with the halving event, this is going to be the catalyst that can push us through the wedge and the macro environment as a whole, with traditional markets, collapses in traditional currencies, just generally a demand for a safe haven that's not going to penalize you with negative interest rates, and along with that as well isn't going to be printed into oblivion. There are 3 assets that can meet that category: gold, silver, and Bitcoin, right? And I think Bitcoin performs out of all of those best in the sense of its monetary policy, but more than anything, it's a small, new emerging asset. It has a lot of room to grow versus gold and silver. Plain and simple. If you consider the amount of inflows that would be required for Bitcoin to double versus gold, which is a $10 trillion market, you're talking about Bitcoin here, which is $150 billion. It takes a fraction of the liquidity and a fraction of new buyers to push Bitcoin's price higher, right? So anyways, wanted to just emphasize that. As COVID-19 continues to grow, there's not much new developments in COVID-19. Testing has been ramping up. Every single company out there and stuff, some of the big manufacturing names in the United States as well as other countries are ramping up production of ventilators, masks, really coming to the task here of trying to help combat this virus. And really more than anything, the 2 things that I still haven't seen yet that I'd like to see is more practicing of social distancing. I know it's a difficult thing, guys. I know we're social creatures, want to talk to people, right? It's just in our nature at the end of the day. But the major thing to do is to keep distance as much as possible. And along with that, one thing that I did do, if you guys want to check it out on Twitter, I posted about it. I made a cotton mask. This is something that you probably might have heard of from a movement called Masks for All, or you might have heard from the recent CDC recommendation, in this case, to make some kind of face cover. This could be something as simple as a scarf, things of that sort that can help minimize it. But at the end of the day, the major thing you want to do is have the highest rate of efficiency, and you also don't want to set demand or take away from the supply of N95 masks. So the best thing that you can do, most likely, is make a cotton mask. And the way you do it is you take a shirt. There's a lot of tutorials online, but I'll actually probably try to leave a link for you guys down in the description or in the comments. But basically, you take the sleeves, right, the cut under the sleeves and near the neckline of a shirt, cotton shirt, make sure it's 100% cotton. You basically cut 2 V shapes on the side of the sleeves, and you can use this to wrap that around your head. I made one. It's comfortable to breathe in. It doesn't hurt your face. It stays on there if you tie it right, And the cool thing is it has about a 70% efficiency rate of blocking out any kind of like bacteria pathogens. Again, in the sense of COVID-19, I think the efficiency is still questionable, but at the end of the day, the real value is that if you're sick as an individual and you're asymptomatic, that you're not spreading it in that case to a large degree. If you cough or sneeze, it captures a lot of it. And when you're in a group setting, maybe if you're walking through a city or town, you're not going to risk spreading it as much as you would previously. So, very important thing to keep in mind. Again, there's no net negative to doing it, right? At the end of the day. So, anyways, just wanted to emphasize that. Now, I want to go ahead here and talk a little bit about an interesting development out of the BIS. Now, we know, for those of you who keep up with the channel actively, and if you don't, definitely consider subscribing, dropping a like. It's always appreciated, guys. Want to have more of you join the family. But in the sense here of the BIS, the Bank of International Settlements, the central bank of central banks, we've had a lot of papers done about central bank digital currencies of any kind, and the idea that, for example, that there's benefits here to having a digital currency. Now, at the end of the day, guys, I think we all agree, let's just make it clear, because I don't want people to get fretted all about this. I think at the end of the day, none of us in the crypto ecosystem would end up using a central bank digital currency or see really that central bank digital currencies are a solution to fiat. And they're not, because they still are bound to the same monetary policy principles, the same centralized control and censorship. It depends, I guess, in that sense of what kind of central bank digital currency you create. In most cases, though, these currencies that they would create are going to be bound to those same rules, right? But it doesn't mean at the end of the day that a central bank digital currency can't bring benefits. And that's what this basically the BIS here tries to propose. And they really relate it here to COVID-19 and the future of payments. And they basically stress at the end of the day that this could be a benefit to everyday individuals because, in this case, there's a rush to cash. People need money in the short term. And along with that as well, again, the major element here is that cash, being physical, can be prone to spreading viruses, spreading disease. Again, money is kind of dirty in some cases, right? That's a big thing that they propose in this paper. But I really don't think this is what the BIS is fretting over, right? I think if, for example, they really were so noble and cared about, people not getting sick, I'm pretty sure the banking community of the world and the sheer power that it has would do a lot other things than just focusing on, maybe we can help play our role in stopping to spread the disease and making digital money. They would have done it a long time ago, probably. Now, what do you think they're really trying to push digital cash for, right? What's really happened over the past weeks here where people are living paycheck to paycheck? They've been waiting for their government stimulus check, right? They've been waiting for that money that's supposed to arrive in their bank account. And many of them, if they don't meet the qualifications, aren't getting that check. And even for those who are getting it, in this case, they're going to have to wait weeks for it, right? Now, what you've seen here during that time period is people are withdrawing cash because they don't have a trust in the financial system. Now, I think we all know, understanding the bank runs of the past and understanding generally how banks have a fraction of the reserves that they claim to have. What do you think they're really concerned about? Do you think the BIS is really trying to stop the spread of viral disease and viruses? Or is it that they're saying we need to get our, to put it frank, we need to get ourselves together and basically make it where when we do these types of government programs, these physical stimulus packages or a direct relief program by the Fed to everyday consumers to go spend, it needs to deposit immediately. Because if they keep withdrawing cash out of the system, then in this case, we're not going to have enough reserves to meet our reserve ratios, right? This is why officials from a lot of different federal organizations, and I think more specifically recently, I think the FDIC had came out, or I can't remember who it was exactly, but one organization came out specifically saying that your money's safe, don't withdraw, like basically telling you all the things that everyone's going to end up going and doing because they just said not to do it, right? It's kind of counterproductive, but at the end of the day, right, I think more than anything, the BIS is saying we need to do some form of digital currency now before it gets to that point where there is a mass cash withdrawal from the system. I really think that's what this is about, right? But again, you guys can read through it yourself. Try to understand the points here of what the BIS is trying to propose. It's all open to you guys. This is the cool thing about it. Organizations like the BIS, they have to put out these papers. There's no way they can communicate their general thesis and concepts to other people in the banking sector without putting some of it out there publicly, right? That they have every reason to put it out publicly because someone would leak it at the end of the day and stuff, right? This is a massive organization that communicates with tons of people. So all this stuff is out there for you guys to read for free. Very nicely written and all compiled together in nice PDFs. But putting that aside, right, that's just kind of the crypto news here. I want to talk a little bit about the macro environment right now, global economy. Taking a look at heavy truck sales. So this is the annual rate in millions of units. So how many are basically being ordered here? We can see that again we have interesting cycles. We have the S&P 500 behind it right there. You can see this simple gray line here. I'll go ahead and I'll zoom in a little bit. Or I guess that doesn't really help here on the Isabel.net website, but I think you guys can generally see it, right? I'll go ahead and scroll so my webcam doesn't get in the way. But you can see here, right? You have stronger sales here during times of bull markets. We go from the bottom here back in 2009, where we were getting about 180,000 new truck orders, upwards towards a much larger number, around a little over 500,000 up here, towards the last three peaks. And we can see here back in 1999 to 2000, you can see here as well in 2007, and here in 2020, right, we set our peaks here. And now we have seen yet again, just like we've seen in the past two previous corrections, dramatic reductions. This being probably just as stark as the last two sell-offs. Or not so much sell-offs, right? I guess in the sense of the market sell-off, we've seen a stark decline in overall sales of trucks. These kind of real-world economic data pieces are very key in understanding just how much of a disruption we're seeing to global GDP, to global, the increase of global unemployment and decline of jobs on the market, and overall just lack of demand for importing and exporting goods and shipping goods across the United States. And this is just the U.S. here. That's not even talking about the decline in truck sales for other countries across the world. Along with that as well, U.S. non-farm payroll employment and U3 unemployment rate. Take a look at this here, guys. We can see here that the estimations here are looking for somewhere above 14% unemployment for U3. Crazy stuff going from the upper band of 3%. Basically overnight in the sense of the chart. Right? Just a couple of weeks in real time. And this is, again, I want to emphasize something very true here, guys. I saw some people say that in the last video we were talking about the unemployment claims. We were talking about unemployment being very severe, probably getting to numbers like this, if not pushing worse towards around 16 to 20% over the next month or so. And a lot of people said, Nick, you're being deceiving because you know that a lot of those people are going to go back to work. Okay? And, that's a fair claim. There are going to be some people who go back to work. I never disagreed with that to any degree. I think that's very important to understand that probably unlike a lot of the unemployment spikes here, where, for example, it takes a much longer period of time, right? There is going to be a pretty significant drop. So if we go, for example, to say 20% by the time we're done with the whole period of trying to end the spread, keeping people indoors, non-essential workers staying home, we're probably going to be somewhere around 18 to 20% unemployment. And by the time we reopen, you can easily see 4 or 5% of those people go back to work, just like they were beforehand, right? To keep the world spinning around, right? But what I want to emphasize is that even though you get a 4 to 5% decline in unemployment, maybe on a month or 2 month basis, those other jobs that have been removed from the system are likely not going to come back for a long time. A lot of restaurant workers, a lot of energy-related jobs, a lot of retail jobs, a lot of the sectors that you think will just come back overnight, I'm not saying you specifically, but some people think are just going to come back magically, are not going to come back. And it doesn't matter because maybe COVID-19 might still be present, right? Even after we try to flatten the curve and everything and stop the spread, it's still going to be present. It's not going to be gone anytime soon until we either get herd immunity or we get some kind of vaccine, combination of the two probably. And along with that as well, right, that's not even the only concern. The psychological effect something so stark like this has a black swan event has on people's psychology as business owners and as employees or as students, whatever it may be, is damaging for the long term. It stunts growth. If you think about it just from your personal experience, guys, this is the way that I would always try to say to just view either your perspective or someone else's perspective, do you or a loved one know that anyone, for example, that had massive goals for the next coming months and just how much they've been disrupted by this, right? It doesn't matter, again, if COVID were to just disappear tomorrow, it would still be getting in the way of what you have planned in this case. And that's what I want to emphasize here. It's why a lot of companies, many restaurants across the country, hundreds of thousands of restaurants are not going to reopen when COVID-19 comes out. And many are shut down for good. There are actual studies and polls that have been done on this right now, surveying restaurants and stuff. We talked about this in the newsletter. And this is a huge domino effect because one person's income is another person's, basically one person's income is another spending activity for another business. It's the cycle of the economy in this case. So we need to understand in this case that if people are not going to be receiving incomes and not going back to work, it's a cyclical downward process. It's a slump in consumer spending. So very important thing to take into mind. This is the contributions of unemployment as we're expecting about a 14%, a spike up to 14% here, and what that's basically made up of by industry in this case. The majority, leisure and hospitality. Hotel demand, guys. I mean, if they even had the CEO come out and state some of the world's worst major events here, 2008, 9/11 in this case, 2001. None of those events were as damaging as COVID-19 has been for this industry. Plain and simple. The hospitality industry has been hit hard. And that's the same with the travel industry through cruise lines, as well as airplane companies or airliners in this case, right? American Airlines, Delta, JetBlue, all getting hammered by the current environment. Now, I want to talk about what this is really going to mean for the stock market because I think many of you are curious about, okay, look, we understand the economy, Nick, in this case, may very well be setting up for depression of some sort. Will the market generally be able to stimulate equity valuations? And quite frankly, I don't think they will be able to because there is one real fundamental element that has driven the stock market, and that is corporate earnings. Now, again, corporate earnings going up doesn't really benefit the average American, right? You're most likely not a shareholder in these companies, but for those who were holding shares when corporate earnings came back up and stock buybacks rose, you benefited very nicely. But right now, with the last quarterly results in Q3 being $750 billion annualized, so this is considering quarter three all the way over to quarter three of 2019, my apologies. Now we're looking towards fourth quarter and first quarter expectations for stock buybacks. And the annualized number just drops more and more, dropping more than dropping down to about $371 billion in this case, dropping in half of what we had beforehand. More than half. And then dropping down to $288 billion in Q1 of 2021. These are levels we haven't seen since 2008. Okay, so this is why I emphasize it's not only expected that we're going to, again, see a rollover here in equity valuations and decline for a full 40, 50, 60% decline, but that this might last for a long time, guys. If a lot of these businesses don't come back, if unemployment remains stagnant for a long time, again, I just would say not to rush positive expectations because there's always going to be an opportunity. If things come roaring back, then we'll probably see it. We can probably take upon those opportunities, but I genuinely don't think that's the case. And I'm an optimistic type. I know it sounds crazy because I'm talking about a depression. I'm just being realistic. I'm a very optimistic person. I like bull markets. I'm not going to miss a bull market if it comes around, right? But at the same time, these are the fundamental things that help stocks rebound. If corporate earnings don't come back and we deal with the next 2 or 3 years of hindrance in the market, in the real world economy, then it's going to reflect here in stock valuations as well. And again, very important thing to keep in mind here, for the first time since back here in 2008, we're nearly testing the 4-year moving average. And in this case, it tends to be that after we have a long economic expansion like we've had here in the past, that once we break that 4-year moving average, that we tend to have a sideways period for the next decade. Very important to keep this in mind as we take a look at one of the most stark sell-offs that we've seen in history. Actually, the worst in the sense of the severity of sell-off during this time period, a 2-month time period. You can put it on a logarithmic chart, doesn't matter. You can see the severity of this. And I don't see any true signs of confidence right now in the price that makes me want to go and massively buy up equities for the long term. Maybe make trades, trade off of the volatility. Yeah, nothing wrong with that. But this isn't anywhere near the pullback range that we need to see, at least what we've seen historically. So anyways, I'd love to hear from you guys. Again, if there's a different opinion that you have, let me know in the comments down below. But please link articles, link sources, rationalize your viewpoints in this case, guys, as I try to do here on the channel. I'm not trying to be biased here. I don't live to see the stock market go down, right? I'm here to be as honest as I can be as a macro trader, because I'll trade and invest in any market. Doesn't really matter. I care about finding proper opportunity, but also as well understanding a lot of the fundamentals, the underlying factors and data points in the economy, and understanding how this is going to play out 6 to 12 months from now. That's what you have to think about. Think in the way that people aren't thinking about, because most people are catching the headlines. Most people are reacting very short term, right? We're going to be thinking in the long term. All right. So anyways, that's it for the core part of the video here, guys. I hope you liked it. Let's go ahead and dive into this sponsored review of Lenin.io. So to start, we're going to be taking a look through the B2X loan program that Lenin.io offers. As we can see in this demo account, I have about a Bitcoin sitting in the account, and this is going to give me the opportunity to double my price exposure or go longer than I normally would just hodling through the B2X program. Now, as we can see here in the B2X loan window, we can see the calculator, which is going to ask how much I need to put as collateral in the sense of the loan, and I can also see the current market price and other miscellaneous information. It's important to note as well, before that you participate in any of Lenin's services, that you go through the proper KYC checks and also set up two-factor authentication, as we are using our funds in unique ways on the platform. Now that we've actually initiated this, we can actually go through now and see how our loan is doing at the moment. So we have our actual loan here that mentions our collateral, the loan to value ratio, and the current outstanding balance of those given loans. So we can go ahead and click here to view the specific loans. We can dive through and actually see on-chain where our funds are being stored through BitGo custody. So again, proof of reserves on-chain, that your funds are being utilized as collateral. In this case as well, that you've got a double of exposure comparative to the previous Bitcoin holding that you might have had. So the cool thing about this is that what it basically gives you is the opportunity to double your exposure to the potential gains of Bitcoin. But it is important to note as well that there is a bit of risk here, as with any type of opportunity where you're going off of some form of a loan, in this case margin. In this case, you are putting yourself to a bit of exposure here where you can't have a margin call if price goes too low. Now, let's say, for example, you wanted to pay down your loans here. There's a lot of different options. You can directly pay with Bitcoin out of your account. In this case, what you're utilizing is collateral. Or in this case as well, you're able to pay with a different payment method. Simply type in your two-factor authentication, and then after typing in the code, you'll be able to recover back your funds from the loan and pay down the original loan value, as well as any interest that might have accrued on top of the principal. In a matter of moments here, we'll be able to see that our B2X account will go back down to normal levels. And we'll be able to see that our Lenin savings account will go back to our normal amount of Bitcoin, as we opted in to pay for Bitcoin in this demo. So in this case, we had returns from Lenin. We can go back to our savings account, and now we have our original amount stored in our Lenin savings account. So again, this is one of many applications that the Lenin.io platform offers, and I highly recommend you guys check out their website to learn more information if you're interested. We'll leave a link down below in the description where you can get access to up to 250,000 Satoshis when you register for a new account and enter in your first B2X order. That being said, everyone, thank you all so much for watching, and I'll see you all in the next video. Stay tuned.